Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about some terrible news regarding Palantir Technologies, specifically how their price targets have been cut and slashed and now they are lower. So we're going to go over those new price targets for Palantir Technologies according to analysts and professionals. We're going to actually calculate our own fair value price target by following the math and logic of the author for the Seeking Alpha article, and then we're going to go over the latest Palantir stock news on top of why the entire stock market is pulling back right now. For more Palantir news videos, remember to go and smash that like button right now. It helps me out a lot and it tells me what videos you all want to see more of. Remember to comment down below your Palantir PLTR stock price targets and where you think Palantir's fair value is. Subscribe if you are new, and without further ado, let's get right into today's story. So if you didn't know, Palantir Technologies is a big data and analytics company that serves both their commercial clients and government agencies. Currently, the PLTR stock price trades for around at $10.98 right now, and the average PLTR stock price target among professionals and Wall Street analysts is around $13, and this is already a decrease from our previous average price target, which is around $15. Analysts have also lowered their range of total price targets because right now, Wall Street analysts have a low-end price target of $9, which is not new. However, the high-end analyst price target for the stock, which has actually fallen from the previous $25.30 price target from analysts. So this is overall really bad news, especially when we see the most bullish Wall Street analyst lower their price target from $25 to around $21, and that's not a good sign. However, in this video, we're going to calculate our own fair value price for Palantir Technologies based upon their revenues, free cash flows, and earnings per share. Palantir is a fantastic, innovative company that has amazing innovative technology, and the author of this article actually thinks that Palantir is trading below their fair value right now. He says that right now, Palantir is at worst fairly valued right now, which gives a fantastic cushion of safety for investors who want to invest into Palantir at the current stock price. And he goes over three main reasons of how Palantir Technologies is a fantastic buying opportunity right now, despite the current market environment and the overall stock market pulling back, and what has happened with Palantir over the last couple months because the stock price has absolutely plummeted. He says that a compelling reason to buy Palantir Technologies PLTR stock right now is that their business is extremely competitive and that their data analytics platforms are leagues ahead of any of their competition. And specifically for their government contracts, this has allowed Palantir Technologies to get a fantastic foothold in the government to obtain fantastic stable government contract revenues. Secondly, the author points out that Palantir has sticky software, and what this means is that once Palantir actually lands a government client or a commercial client, these clients are actually incentivized to continue their relationship with Palantir Technologies by either extending their existing contracts or signing new, longer contracts with Palantir Technologies. And this creates fantastic, long-lasting relationships and a fantastic networking opportunity between Palantir and their customers. Now, what I love about Palantir Technologies is that they do have two different business segments. As you know, they have their government business as well as their commercial business. And while their commercial business is rapidly scaling, their government business allows them to have a steady stream of revenues regardless of the overall market environment. I also want to highlight Palantir's balance sheet, which looks absolutely amazing. Their fundamentals are strong and their financials are absolutely amazing. Right now, Palantir has a very strong balance sheet where Palantir has around $2.5 billion worth of cash or short-term cash equivalents and only around $260 million worth of debt, if you can even classify that as debt. Palantir also has a very impressive amount of strong cash flows going through their company, and this is going to help us with our valuation when we start to calculate the fair value. Other investors have brought up the fact that they hate Palantir's stock-based compensation program because it's hurting Palantir's profitability. And although this is true that their stock-based compensation program is preventing Palantir from becoming a profitable company, management is letting off the gas for their stock-based compensation program, and they are slowly teetering off from their stock-based compensation. However, I do want to add that this allows them to keep that amount of money on their balance sheet. Otherwise, they would have to fork out money from their balance sheet. So the stock-based compensation is actually guaranteeing that Palantir has a strong balance sheet right now. So currently, Palantir is in its scaling mode and growth mode, mode, and it's not focused on profitability right now. It's mainly focused on growing their overall revenues and customer base. And this is seen from their revenue growth rate coming in at around 41%, along with their cash flow margins coming in at 28% for 2021, which was absolutely fantastic news. Now, with all of this very bullish news, now that you're all caught up, let's talk about Palantir's fair value price, and we're going to do this by taking into consideration their future revenues, sales, their expenses, as well as their overall strength of their balance sheet and fundamentals, so we can calculate 1 year out, 5 years out, and 10 years out. We're calculating 1 year out for a short-term investor, 5 years out for a medium to long-term investor, and 10 years out for a very long-term investor such as myself. So we're going to take into consideration their overall revenue growth, their financials on their balance sheet, as well as their earnings per share, so we can obtain a fair value stock price for Palantir Technologies right now. So we're going to start off with the revenue growth. And right now the revenue growth has followed more of a polynomial trend, and it's expanding at a fantastic CAGR of above 30%, which is exactly what management said it would do all the way until 2025. So as you can see, we have our formulas on screen here if you would like to check the math, and how we can calculate these projections is that we're using a data that Palantir has already brought in, and then we are just multiplying that out for the next 1, 5, and 10 years. And as you can see, their revenues are absolutely on a fantastic growth trajectory, which should be very positive and appealing to investors. Based upon our graph, we can see that by 2031, Palantir Technologies could be bringing in around $14.5 billion worth of revenues. However, how would this compare to their SG&A expenses, which would be selling and general and administrative expenses, as well as their research and development expenses? So luckily we have data and graphs for those as well. So clearly as revenue increases, their cost of revenues will actually also increase, but I want to more focus on their overall expenses, which again is almost a perfect linear line, but luckily the revenues are outpacing any of their expenses, and that's exactly what we want to see from a fundamentally sound business. And as far as their research and development expenses go, this is just going to help bolster future revenues, because by Palantir spending money on research and development, that is going to further their overall technology and hopefully their overall market reach. So you can see that these are very compelling forecasts for the future of Palantir Technologies. And on this chart on screen, you can see the years of 1 year, 5 years, and 10 years out for their revenues, cost of revenues, selling and general and administrative expenses, research and development expenses, as well as their other expenses on top of their operating income. So the company for 2022 is going to bring in revenues at around $2.168 billion. By 2026, they're going to bring in over $6 billion worth of revenue, and by 2031, it's going to be over $14.5 billion. We can also see them have very impressive operating income as soon as 2024 to 2025 to have fantastic operating income by 2026 and 2031. So that is something to look forward to, because remember, Palantir Technologies is supposed to become a profitable company between 2024 or 2025. And this could absolutely ignite their overall stock price. And remember, this is just what they're bringing in. I haven't even brought in the statistics for their overall balance sheet yet, because we can also anticipate their balance sheet and their net invested capital to also increase on a very linear basis. Now, with these assumptions, we're going to assume that there will be no dividends and that the earnings will be accumulated into equity. So for this, we're going to take into consideration long-term operating assets, net invested capital, net debt, total equity, and basic weighted average shares outstanding. So based on these fantastic metrics, we can see that Palantir Technologies has an extremely secure balance sheet, very little to no debt, and plenty of cash on hand to hold them through until Palantir reaches profitability on a GAAP or a generally accepted accounting principles basis. But what does this mean for their PE ratio and EPS by 2031 for long-term investors? Well, Palantir could be bringing in around $2.24 for their earnings per share in 2031 with a PE ratio of around 27. And we're also going to use a discount rate of around 15%, which would mean that Palantir Technologies today should be worth around $14.77. So that would mean that $14.77 is our fair value price target for Palantir Technologies right now. And again, this is actually a very bearish price target, because using a discounted rate of around 15% is rather high. That's why other institutions such as Morningstar can use a DCF model and actually calculate a fair value price of Palantir Technologies that's as high as $31 per share. So even while using bearish assumptions such such as a 25% CAGR or compounding annual growth rate and a 15% discount rate, which are both very low metrics, and honestly the price could be much higher than that, we still get a stock price target or a fair value target that is above the stock's current price, which means that Palantir is trading somewhat below their fair value right now. This is not even taking into consideration how Palantir is going to grow at over a 25% CAGR rate, because management projects a 30% CAGR rate for their revenue specifically from now until 2025. And Palantir normally actually beats these revenue predictions, because in 2021 they had around a 41% CAGR rate for their revenue. So Palantir could still surprise investors with amazing explosive growth, especially when their commercial revenues will eventually eclipse and pass their government revenues, because I personally think that their commercial business is their key to profitability, as well as them scaling phenomenally in their overall revenue growth. So although we got bad news about Wall Street analysts lowering their bullish price target from around $25.30 down to $21, we do have a fair value price target for this year of around $14.77, and remember, that is a very bearish estimate, which still is higher than the current stock price, making Palantir Technologies a fantastic fair value deal. So I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.